Hi everyone, this is Jordan at Pure Elliott Wave here for your weekly Eurodollar analysis for the week ending May 19th, 2023. Just a heads up for you, this is our last free Euro analysis, and next week we'll be launching it as a subscription. If you're interested in that and you like what you see here, you like what you saw the past few weeks, you can click on the link in the description below. Overall, for the Eurodollar, we're expecting a short-term pullback for the next few weeks to a target zone of 1.02862 to 1.01079, which I'll show you on the charts in just a moment. We also have an alternate that's expecting the short-term pullback is over and upward momentum would be underway. So let's get into the weekly chart. On the weekly chart, you can see this week yielded a bearish candlestick, and it has just breached below this best fit channel. On the daily chart, you can see a very clean breach, so we would say this channel is breached and we have a new bearish trend as indicated by ADX as well. Invalidation for the current wave count, which sees intermediate 1 over at the top in March 2023, and an A, B, C expanding flat for intermediate 2, going down even further, approximately around this target range of the 618 Fibonacci retracement, and then a large bull market will most likely resume after that level. Invalidation sits below at 0.95364. Intermediate 2 may not move beyond the start of intermediate 1. On the daily chart, let's pick up from minor A right here. Here's minor A going into B and C. You can see the last 2 weeks we've stuck to this downward best fit and Elliott wave channel. This Elliott channel usually predicts the retracement for the ends of 4, and we had good luck on that with the past impulse at micro degree. Subminuet, which is the orange waves here, is also stick nicely to this Elliott wave channel where you draw a line from 1 to 3, parallel copy on 2, and 4 usually finds support along the end of this channel, as well as 5. We are expecting another wave down at the beginning of next week because this 4th subminuet wave is likely complete, as you can see on the hourly chart. Invalidation sits above at 1.10019, where no wave in this subminuet 1, 2, 3, 4, 5 may move into the price territory of wave 1. The target zone remains the same as last week, a zone of 1.02862, where C would reach the 618 extension of minor A, and 1.01079, where 2 would reach the 618 retracement of intermediate 1. On the hourly chart, we'll take off from the top of micro 2. Here's the top of micro 2 and the subsequent bearish price action fit inside this Elliott channel, also acting as a best fit at the current time. We have some downside targets for you for the short term. First target is where minuet 3 would reach the 2.618 extension of minuet 1, which is not visible on this chart. That's at 1.07463. And the next target is where subminuet 5 would reach equality with subminuet 1, which is not visible on this chart, and that would happen at 1.07240. That target in particular works well with the bottom end of this channel, and after we do that downward movement, then we'd likely have an upward side that would not reach above this area around 1.10 for minuet 4. This is our alternate wave count for the current bull trend upward, ending with intermediate 1, and this sees intermediate 2 complete as a zigzag A, B, C at minor level. And while this does meet the rules for a zigzag, A being a 5-wave structure, B being a 3-wave structure, C being a 5-wave structure, doesn't fit the characteristics well that zigzags usually are very sharp corrections, especially in a wave 2 position. And that's why it is our alternate at this time. I have redrawn the best fit channel here to see a potential bottom for minor 2 at this point, because within minor 2 we have a clean 3-wave structure, which I'll show you on the daily and the hourly. The target, which we can calculate ratio based on intermediate 1, intermediate 2, and measuring off the bottom right here for intermediate 3s for the 1.618 Fibonacci extension at 1.29378. That's our next long-term upward target. And we could potentially see that in several more weeks. Invalidation for this count sits below, where wave 2 may not move beyond the start of wave 1 in an impulse, and wave 3 always subdivides as an impulse. On the daily chart, we'll take off from the top of intermediate 1 right here, and we have our A, B, C for intermediate 2, and minor 1 as a leading contracting diagonal, 1, 2, 3, 4, 5, and minor 2 as an A, B, C zigzag, subdividing as 5, 3, 5. It's hard to see, but A subdivides as a very clean leading contracting diagonal in this area as well. Due to the very clean 1, 2, 3, 4, 5 wave structure at minuet level, we could see the bottom here and subsequent bullish price action. With minor 2 complete, we can measure an extension of 1 from the bottom of 2 at the 1.618 level for a target for minor 3 to reach 1.16974. But that may be conservative, because wave 3 of a 3 at intermediate level, this minor wave 3 could be explosive, as 3 of 3s usually are within an Elliott wave structure. On the hourly chart, minuet 3 is right here, and you can see the recent price action has fit very well in this best fit channel. Sub-minuet 3 of minuet 3 had a very nice 3 of 3 downward spike in this area. 3 completed here. 4 met the edge of this best fit channel, and then 5 went 1, 2, 3, 4, 5, and 5th wave extending. So it's really nice to see these clean impulses as the Elliott wave count was expecting a few weeks ago. With minor 2 complete, we might be in the very early stages of minor 3, and we'd have confidence in this alternate wave count at 1.10019 when the main wave count is invalidated. So a little bit of a ways to go upward. This is the weekly volume data for the euro-dollar. You can see we have decreasing volume with the decreasing price. We've studied the past on the euro-dollar. It's pretty common to see the tops have decreasing volume, especially when a new trend starts. So we're not too concerned about the decreasing volume with our new bearish trend. Money flow is neutral, and on-balance volume still within this long-held range, but the lines are not too technically significant, with only 3 to 4 tests each and pretty steep slopes to them. These are the other weekly technicals. You can see this past week we had just a small bearish candlestick. Support sits below at 1.050 and resistance above at 1.117. 200-day moving average still sloping up. We had a few reversal patterns at the top, including a shooting star and a spinning top doji. Currently ADX is showing no clear trend, reversing off of the previous slightly extreme bullish trend. With ADX showing no clear trend, we'll shift to our stochastics and support and resistance. The stochastics are currently neutral and resistance is above, support below. We still have a little bit of a ways before we would expect a pullback based on this model. ATR is decreasing though, so volatility may be limited to the downside. RSI at neutral. On the daily volume chart, you can see day over day we had a slight increase, but this increase didn't yield a breach of the previous trend. So if we did see a increase in volume that was substantial, and a breach of the previous trend channel, that may be something to concern us regarding our main Elliott wave count. Money flow is neutral and unbalanced volume. No new range after the recent breakout. If you missed it, about a week ago, we called this signal and said it was a very strong bearish signal, which gave us a good amount of downward momentum. My stock charts was having a bit of a problem, so I did the rest of our technicals for the daily on motive wave. So that's why this chart looks a little different. The next resistance overhead, 1.1170, support below, 1.050, and the moving averages are moderately bullish. 13-day is over the 50-day. 200-day we saw on the weekly chart was sloping up as well, and overall moderately bullish with the 13-day sloping down, 50-day sloping up in a bullish fashion. In the previous upward trend, we were looking for bearish reversal patterns, which we saw many along this trajectory, and we labeled a few for you here, but there were even more back here. So now that we're in a bearish trend, we're keeping an eye out for a bullish reversal pattern, and we have not seen any yet. ADX is indicating sloping up, and the negative DX line over the positive. We are in a bear trend, and it does have longer to go before it gets into the extreme territory. RSI is neutral, stochastics are oversold, and ATR overall with the recent downward movement is declining, showing there could be some limited volatility to the downside. Overall, I'd say the technical charts fit well with the main Elliott wave count, expecting some more downward movement before a pullback. If you like what you saw here today, you can click on the link below and we'll have a special grandfather rate for anyone who signs up for the Euro-Dollar service early next week. Thank you.